Hello and welcome to Focus IR. I am John Human. I'm very pleased to welcome back Jacques Vaillancourt, President and CEO of Mineral and Financial Investment Limited. How are you doing, Jacques?
I'm well, thank you, John. How are you?
Very well, thank you. Very well. And we're going to talk about your half-year results today, which are very, very strong indeed, particularly on the NAV per share front, despite, as you say in the report, continuing volatile economic and political backdrops. Jacques, talk us through the NAV performance. What was behind that?
Let's just go through the numbers. The net asset value for the period ending December 31st, 2024 was 32.2p. That's up 25% from 25.8p a year ago. And our net earnings for the period, that 6 month, was 1.25 million pounds versus 588,000 pounds. So the trend is good. Our 5-year compound growth rate it's still in the, I think the number that we have is about 18.8, but within that period there was a down some performance pressure that I think this year will catch up on. And we're still debt free. Our investable capital is up 26% from where it was last year. And so we're up to 13.1 million. We're not the size we'd like to be, but we're on our way.
Yeah, very, very much so. Very much so. So let's talk about the portfolio composition, the balance between tactical and strategic, and how that's really helped this performance.
Well, the nature of our tactical portfolio, we have 3 asset categories. Cash, which is 3.8%, which is a little low we would like to have 10 to 15%, but it masks the fact that we have 1,200 ounces of gold, a little more than 1,200 ounces of gold, which is part of the tactical portfolio. And so our actual liquidity is significantly higher than that. We'd be about 23% of our investable capital, or about 3 million pounds, would be, if you included the gold, would be cash or near cash. And our tactical portfolio, it's a little bit of an odd one for people to understand, but because we naturally have a lot of cash, so we can move quickly, because if you're small, you have to have a distinct advantage. And our investee companies, when they need capital, we quickly assess whether we want to participate, and then we have to be able to quickly provide that capital. So that's one of our USPs. And so the tactical portfolio can be all over the place. It can be long commodities, it can be short volatility, it can be long commodity oil, and can be short natural gas. But mostly it will be invested in natural resource and specifically mining companies. And so the performance was a little skewed by the fact that we took a lot of cash, put it in our tactical, as we were providing bridge financing for Golden Sun's. They'd completed the mill. They have a mill. Golden Sun is one of our strategic investments. And we own about 6% of the company. But they completed their mill at the Bella Vista mine in Costa Rica, and they had some time delays, a little bit of a cost overrun, not much, but a little bit. But it was a time delays that sort of chewed up their excess capital, and so they needed some bridge financing. We decided that we wanted to have more bullion, and so it was a coincidence of their need and our want. And so we financed them by buying some deferred gold contracts. And we were buying because they were in a little bit of a situation where they were eager for us to help them. We were buying some of their future production at $1,750 an ounce, when gold was, as at the time, about $2,950 an ounce. Now it's over $3,000. So these contracts haven't marked them up to the current market price. I think the prevailing value we have as of the end of the second quarter is about $2,600 per ounce. So they needed the capital. We wanted to provide them some gold, and so it just worked out. But we're just maybe to touch on some of the bigger issue on why we want gold is that with the political instability that's occurring in the United States and our sense that interest rates are not going to come down. The equity market seem to be adamant that rates are going to come down, and maybe administered rates are going to come down, but market rates are not going to come down in the United States very much. There's still a lot of inflation. There's some instability in terms of political policies, and ours is not to judge these policies, but rather to figure out how to make money at it. And so our view is that we'd be better trying not to have too many equities, because we think that their valuation could be a little vulnerable, and to have more of the underlying commodities, because we think the U.S. dollar at the time was 106, now it's 103. When the U.S. dollar goes down, the price of commodities goes up. There's usually sort of a seesaw effect. And since the year end, we've taken some profits on some securities and bought, and I think we own about over 30,000 ounces of silver as well as the 1,200 ounces of gold. And it's not something that, we're not a commodity fund, but it's more a moment in time. And we're looking for some interesting opportunities in probably more the base metal side than the precious metal side. We've benefited from having a significant overweighting in precious metals. So again, our performance this year has been as a result of some decisions we made that we felt precious metals would outperform base metals, and they have. If you look at the performance of gold year over year, it's up almost 30%, 29.3%, and silver is up 26.1%. Normally, in a rising market, silver outperforms gold. So that's why we thought we'd buy a little bit of silver and take advantage of that anomalous lag in silver's performance. One of our big performers in the portfolio has been Luca. It was a strategic investment for us. We bought 5.725 million shares at 35 cents, and we had some half warrants, so 2.7 million warrants, exercisable at 50 cents. And the stock's now $1.19. So that's performed well. At the end of the period, Luca was in the high 50s as a valuation. It's now $1.19. So that's done quite well. But we've moved it from our strategic portfolio to our tactical portfolio. And so we don't see it as necessarily being part of our portfolio in the next 2-3 years, because it's getting close to what we thought the target was going to be in and around this time period. And so that's sort of where we've been. Our performance has been a little bit because we selected to be heavily weighted in precious metals, but we're in this transition period where gold is now over 3,000, and we're moving towards having more base metals. And in the period, we've also acquired some producing lithium assets. And we haven't had lithium in our portfolio for a long time. And as we think there's a trade in it, we're more focused on some of the producers than the exploration companies, because there was an explosion in those companies, and they all have various probabilities of success. And I don't want to be exposed to lithium over the longer term. The technology may change, and there's no shortage of lithium in the market. There's just a momentary surplus of produced lithium. We think that'll tighten up, and then prices should rally from there.
Yeah, but it turns out there's been a lot of help from external tailwinds, but you've obviously been very judicious in setting up your portfolio to make sure you capture that. Perhaps talk us through. You mentioned this sort of spreading to base metals. I think you're saying the report that commodity price moves, mineral commodity price moves, will be the next leg. Tell us a bit more about that.
Well, a couple things. One, we're of the mind that not only is it seemingly a policy of the new administration in the United States, they would like to see a lower U.S. dollar. In an environment like that, it will create some stimulus for demand for base metals in the United States. but it'll also be a catalyst for price movements upwards. And copper has always been everyone's favorite commodity, but it's always proven to be a disappointment year over year. And I think there's a little bit of optimism exhaustion on copper, which is usually a good time for us to start looking at things. And so that we have been looking at some exotic things that are becoming a little interesting, like antimony, and sort of the often asked questions of us is, what are you going to do over the next 12 months? One thing we're absolutely focused on is trying to find a way to monetize our Golden Sun resource investment and we're in discussions with not only Golden Sun's management, who we're now on the board of the company, and just to update people on Golden Sun, the mill's now producing. It's now generating cash. I get daily updates on where they're producing. I think today they were at 325 tons per day. Their break-even cash flow level is at 200 tons per day. And so we're on our way. But the nature of these mills is that it's a teething process. You sort of figure out this equipment is well suited for that. Then you have to sort of fine tune it and replace parts. But we're well on our way to getting to an intermediate or short-term target of about 400 tons per day, and then adding to the filter presses, which is where you have to run. It's a pinch point for production, and we can get that up to 500 tons per day. And at 500 tons per day, you'll be operating at about closing in on 25,000 ounces per year. So that'll be a pretty attractive purchase for anybody, as well as the 20 other properties, the exploration projects that exist in Costa Rica. So we're the largest shareholder, and it sounds rather dramatic, the largest shareholder, or one of the largest shareholders of the largest mining company in Costa Rica. It's sort of like being the tallest midget or tallest dwarf in Snow White's story. No one remembers the tallest dwarf. But it's 25,000 ounces with the objective of getting to 80,000 ounces in 3 years. So it's a pretty attractive asset.
Yeah. Now it sounds like there's plenty more in the tank to keep that NAV performance flying. Jacques, thank you so much for talking us through the results again, and congratulations on what is a very, very strong performance.